All right, let's start looking at some markets and see what's going on. S&P is pulling back, and here's the thing. As I've said multiple times, especially in uptrends, right? When you have a shortening of the thrust over here, which is just an upthrust in a context of a uptrend, right? Up thrusts can be a shortening of the thrust. The difference is one is in the context of a trend, the other is in the context of a trading range, or whatever. So this right here, the high, let me see what the high is. I don't know what the hell high is, but if it did take it out, just look for a spring of this low. All right, so looking for a spring of that low, and let's just get some additional data. And make sure. Anyway, so I'm looking for a spring, and it's going to get really interesting. You have the reversal. You could tell that, holy shit. It's probably because of the holiday volume, but the volume is just over 100% of the prior, holiday, whatever. I think on Friday. So that doesn't mean anything. It's just So I'm looking for it to spring and test. Probably test this low. Take out this, look like a breakdown, but not a breakdown, and see the reversal. So we'll be watching this. And what's really, really interesting is if you've seen the prior video, you see that I'm incorporating the point figure because I always knew that, point figure, there has to, the problem with technical analysis is you're always analyzing the past. All right. So anything that gives you predictability is a very big deal. Because in analysis, all types of analysis, even, either you're always analyzing the past or the present, but there has to be methods for predicting the future. And what are they? I mean, most of them are built in cycles, and then Elliott, and then some extensions. But from the Wyckoff perspective, there are a couple of things that focus on prediction. The key thing is what predicts the swing and how far it's going to go is a point figure. So that's one point figure count, and that's why it's so valuable because it's not looking at hindsight, or the current. It's actually projecting. It's looking at current data, but in order to project. So that's the first thing. The second thing is the Wyckoff wave is also really important, because it has the predictability element. Why? Because the wave of the strongest stocks is supposedly going to move before the other markets, including the indexes. So there's an element of predictability there, and I've constructed it in the past. I might just do that again. Probably have it somewhere. It's not rocket science, but you do have to update it. Anytime there's a new trend, you want to see what the market leaders are. So it does need to be updated. Like right now, what are the market leaders? You cannot say technology is a market leader, right? So that's why you cannot use a Tesla or a Apple, because the industrials are the ones that are leading the market right now. So, like Caterpillar, I think Goldman Sachs is leading, Etsy, and in healthcare, I think it was Merck, if I'm not mistaken. I forget. Oh no, Moderna. I think Moderna or Merck. I think Moderna is leading. Just like the 5, 6, 7 stocks, whatever. So they will have a tendency to move first, but definitely move further. So you want to, it has that predictability element, which is very, very lucrative to any type of trader if you have that. So you have point figure, you have the Wyckoff wave, and then you have position sheet where you're identifying which stocks are in position 1, 2, 3, and 4. 1 being a short-term move, 2 being a massive move, up, meaning the 1 and 2 are bullish moves. 3 is a small move down, and 4 is a big move down. And the way I view it is, number 1 is a bull swing target. Number 2 is a bull trend target. Number 3 is a bear swing pullback, like a bear rally or pullback target. And number 4 is a entire distribution count. That's the way I view it. And so that has predictability, because a lot of times there's a bunch of stocks that will move first. And if you're watching them on your position sheet, you'll know which stocks are moving and their ability to influence. Anyway, so those 3 things are really important. Is there anything else? And of course, the other thing is when you're watching rally and pullbacks, just within the market itself, if the pullback have lower volume and less distance, what does that mean? If the pullback swings have less volume and less distance, then in general it means that you're going to get a bull swing higher, right? You're going to get a rally higher. So things like that are some obvious things, but the major point here is anything that has predictability, focus on it. Anyway, so ES down, looking for a spring. This damn thing, the dollar, I don't know what's going on here. It's not. Oh no, these are bonds. So bonds, I was should have pulled back. Still hasn't pulled back. Today's volume, today's volume can't really compare to holiday volume, so it's no point. And Bitcoin, yeah, it's just disaster. The dollar here, okay, now I was waiting for this. You finally have a reversal. The reversal is on big volume, bigger than 1, 2, 3, 4, 5, 6, 7, probably in 7 days. So I was waiting for this thing. This is your reversal bar, takes out the prior 2-day high. Now looking for the pullback and looking for them to take out this high. Okay, this is important for them to take out this high because this area here, this is, I don't know what to call, zone or level or whatever. This is a very nice area to go long on the euro instead of short on the dollar, long on the euro. When it takes out this high, and this thing is not gonna go nowhere. You know why? You see this swing up? Look at this. Look at this. You see low, 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 low. There's no sign of strength. This is weakness. Low, 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 low. That's exactly what you want to see on a pullback. So because of that declining pressure, this thing is really, this is bullshit pullback, meaning it's not going to go anywhere. So the next pullback is going to be kind of like the prior pullback, but we'll see how far it can go and hit it. So this is going to set up the euro trade. You can do a euro or pound. Those are the liquid ones. So anyway, so here on the crude, it's in a spring position. I can't really make heads or tails of this, but what you can say is that it didn't break down below the range low. So that's important. Will we see a spring over here? Will we see a spring? So you want to take a look at the demand action on crude, and you can definitely determine that. This bar should give you some info. Maybe I look at it and definitely counts as well. I don't know what the count of this is, but you have a resistance point and resistance point. So there should be a count. And here you have that rally and a pullback. This will also have a count. So anyway, the next one is gold. Gold, I've been waiting for this thing to pull back into this area of demand, you know, and it's really nice because it goes down, up, reversing. So you can expect that pullback to come down. And let me see the volume on this. Again, there's no heavy demand, so selling, weak selling. See, look at this. Downward trending supply. So that was your climax. After that, supply is downward trending, and no acceleration here. So it's coming down to lower levels, which is where I'm interested in it. All setting up for springs, folks. These are all setting up for that spring. Now the thing is, it might look, when it comes down, it might look like a breakdown, but that happens all the time. Those breakdowns are really climaxes, and you should be ready to anticipate the reversal and analyze them. Because the trend is up, and it's not easy to break trend. It's just not easy to break trend. So, It's a reversal day, everybody knows that, but how much cause is there for a reversal? I'll take a look at that in a bit too. Right. All right, so let's analyze this action over here. All right. Now, this is more of the intraday action, so very important to take a look at that. Actually, the decline, this right here is bearish. This is the tip off. Was this today? It should. Low is less than 1 session, 2 session, 3 session, not the 4th session. So this low is lower than 1, 2, probably 3 sessions. So if any pullback is probably a sell to go lower. This is the biggest in 9 waves. It's 17 bars and all of that. A lot of time, you don't really, here the market breadth is telling you it's a sell right there. This is, I was looking at this before. 152 is the biggest. 1, 2, 3, 4, 5, 6. 6 down waves right there. It actually went negative. See, you saw red. So I mean, this helps you also. The other thing is, I've always said that the market breadth, and any one of those market breadth indicators, they have a leading aspect to them. So, I mean, they do help. I mean, over here, look, this one here, when it gets above 200, it's gonna go. Like over here, it forecasted the rally. Over here, it's forecasting the decline earlier in the day, which I wasn't looking at it, but it goes down. Anyway, let's see how much juice this thing has. Okay. Now bringing the point and figure. Now here's the thing I'm not sure about is if this is a small decline or if this count is the whole count. If it's the whole count, then you have a big problem. Bulls have a big problem. So 2, 3, 4, 5. 1, 2, 3, 4, 5. So already, I mean, this is a minor objective has been reached already, right? So we'll see if it comes back up and continues to form cause. The problem would be if this entire thing is cause. That right there would be a problem. All right, that right there would be a problem. All right, but I'm not sure about that, so I'll just back off until I am sure. Let's take a look at the 3. One, 2, 3, 4, 5, 6, 7, 8. Current count is about 8. I'll just back off a bit. I'm just not sure yet because I'm just not sure. All right, so the SPY bearish right now. You have a reversal day. Market breadth is confirming right here. And it takes out 3 sessions. This down wave, the biggest down wave in about 9 waves. That's a problem. But at the same time, it's coming into this reaccumulation area. This is a reaccumulation area. So we'll see if it gets sprung or if, what happens here. And for the cause, I'm just not sure. It's just weird looking. Go here. This was the climax of the prior high. Climax right there, and then fell, reaccumulated in order to bring it back up. Could not take out the high. Holiday volume. Rejected off this upthrust down into the reaccumulation area. So we have to see if this whole thing is distribution or is just a rally that failed and it's a pullback. So that's what's going to be interesting. All right. All right, that's all, folks. Take care. Bye.